Minister Coleman.
I'd just like to go back to the primary task of the Future Fund, and that's around investment decision making. In the annual report, the chairman of the fund talks about the investment environment facing elevated risks. Can you just detail for us what those elevated risks are?
Absolutely, Senator. The thing about when you're a global investor across all asset classes, there's always many risks that you can highlight. I think the largest risk that we can, many risks have not occurred that we've been worried about, but the largest risk that continues to weigh on our minds, and I think is something that the next few years will be heavily influenced by, is the unwinding of monetary policy. So the one reason why a lot of the risks that we were worried about and have been worried about haven't manifested is because there continues to be very strong monetary action, easy accommodative conditions, and that is unsustainable. At some point that needs to come to an end, and what happens when it does, I think, is the key risk for the near term. Obviously, as interest rates rise, that sort of mechanically has an impact on the value of assets. Mm-hmm. It's possible that can be offset if cash flows are increasing. So if we have a very buoyant global economy, then that risk need not materially impair asset prices. But if the cash flow growth doesn't come through, then you would mechanically see a reduction in the value of many investments. So that's one thing that we worry about.
Just on that point, so when the chairman talks about central banks struggling, which is his word, struggling with the timing of interest rate rises, are you suggesting that there's a degree of there's unpredictability around that, so you can't see clearly how central banks might accommodate that strategy? Is that what's causing the uncertainty? Because you'd expect that central banks would operate in a calm, predictable manner in order to provide that sort of global investment security or investment environment.
I think when the chairman uses the word struggling, he's reflecting the fact that it's an incredibly difficult job that they have, particularly at the moment. It's always a difficult job, particularly at the moment, because it's that there are mixed signals that the economies are sending to the central bankers. They have some indicators which are telling them that the economy is very, very strong. Unemployment is very, very low. It's unusually low, actually, across most of, in aggregate, across many of the world's larger economies. That would tell you that the economies are very strong and you should be able to raise interest rates quite quickly. Inflation is also very, very low, and that would tell you that the economies aren't very strong, and that if you were to raise interest rates, you're likely to send the economy into a downward spiral. So I think the struggle is that there is conflicting information, conflicting data, and the concern, the worry that will be, I suspect, in the back of many of the central bankers' minds is that they don't have much firepower if they were to make a mistake. So if the economies were to turn down, when interest rates are already so low, there isn't much that they could do to fight that downturn. They can't cut rates very far. So they'll be wanting to be extra careful to make sure they don't send things down into that downward spiral. The risk of that is that actually things get out of control, perhaps on the upside, and we get inflation that picks up too rapidly. So it's a difficult job, and I think that's what the word struggle means. Our job is to worry about these things, but we have to manage a portfolio, and we have to work through it. And I think, and on balance, if you take a microscope out to the portfolio update, you can see that we have increased risk slightly in the portfolio since June, between June and September, and that is reflecting the fact that the world is recovering quite nicely. There is reasonably synchronised growth, and a number of the risks have started to recede.
So when the chairman, this is my final question, Chair, when the chairman, Mr Costello, talks about international uncertainty or international political tension, is the phrase he used, which political tensions is he referring to?
Well, political tensions around the world that investors have been worried about. Obviously, because I think those comments are from June. So there have been a number of elections in Europe, and there are still some to come. And so the appeal of more extreme parties in Europe, which could have challenged the existence of the euro, put a bigger risk into the existence of that system. Many of those risks that they're still there. Certainly, those parties are still. They have shown well in the polls, but I don't think many of the greater fears of what that might mean for the euro have come about. But that was certainly one. Obviously, investors also worry about US presidents when they talk about protectionism and things like that. That's not usually good for global investors when you start getting barriers to trade and capital flows. So that sort of would be a concern. So there's the ongoing drama of Brexit is something that that impacts a global investor. So there are a number of these sorts of.
If you had to rank them, Mr. Neil, how would you rank them? Is it Europe number 1, American presidents number 2, Brexit number 3?
I think there's a time frame issue there, but the first thing I would say is that since the chairman said those remarks, many of them have receded, which is a good thing, obviously, and it's one reason why we have a little more risk in the portfolio now. So many of those risks have receded. So putting a ranking on it is hard, and the moment you do that, something happens tomorrow which proves that you're
an investor, not a diplomat.
So, that's why we construct a balanced portfolio across a number of exposures to sort of not be particularly exposed. Our job is to make sure we're not overly exposed to any one of those risks.
Yeah. Well, no, congratulations to what's an excellent outcome.
Thank you.